All right, everyone, welcome back for another episode of Carnivore Trades. Today is Monday, April 3rd, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it here. So, not a lot going on today. Market's kind of floating higher. Obviously, we did have a few headlines, though. OPEC, obviously the big one, announcing 1.1 million barrels of production cuts. It's not a huge amount, but obviously the market is getting the crude market's getting a nice bid here, regardless, and up 6%. It is off the highs here. I'm not sure how much upside here it has in the short term, but it's a nice gap up, and it's kind of funny. I've been tweeting about this the last day or so. If you guys follow me on Twitter, so I just wanted. So take a look at the shorts. I kind of made a joke about how to profit in the futures market. Step 1, have inside info. Step 2, sell to open a bunch of contracts. Step 3, close it before the production cuts are made. And you take a look here at the short contracts. We had a big spike, and then this was as of Friday's close. A big sell or a big covering rally in those oil futures, and it's so obvious sometimes. I mean, so they broke it down, and then somebody started buying, right here, and it rallied up, and all of a sudden Sunday night, out of nowhere, OPEC just decides to cut production. Very fortunate for whoever bought down here, right? Just interesting stuff, though. Either way, big move there for oil. I do think it needs to fill this gap. Now, again, I've been talking about 50 to 60. I'm not so sure it gets there now, because basically you have, what I would call a failed breakdown in place. That doesn't mean I'm bullish short term. I wouldn't chase it up here. You have a gap on spot crude that's on the monthly chart. Typically those get filled, so I wouldn't chase up here. I'd wait for a bull pattern here. I was more so inclined to think that we would have a little bit more pressure in crude up until the middle of the year, so sort of end of quarter 2, but we'll see what we get. I do think it is, it's already pretty overbought and extended. We're up 20% in the last 2 weeks. So does need to do some back end filling here, but nice move there for the crude bulls. As far as the spiders here, they were actually lower on the news. Again, obviously higher crude means inflation, but then they just kind of reversed that. We had the ISM number this morning, and that came in colder than expected. So markets got a little bit of a bid off that. You see bonds rallying, the 2-year up 17 basis points here on the note, and then the 30-year up 67, 10-year up 0.5% there. So bonds getting a little bit of a bid. And we talked about this last week. The market's sniffing this out. It's sniffing out contraction right now. OPEC can do what they want with oil, but the market's going to look at other things. It's going to look at data. And if data comes in, by the way, we have a jobs number Friday, which the market will be closed for. Maybe that's convenient, maybe not. So again, 4-day trading week. But we have jobs data Friday, and the market's sniffing out contraction right now, and that's why we're rallying. It's really that simple. Now, again, to say it one more time, historically, the Fed pivot, that generally is the big sell the news indicator, and I think that's going to happen. But right now, until that happens, the market will rally until that sell the news event. Short term, however, I have to think we're getting very stretched. Spiders are up 8% in the last couple of weeks. The Qs are up 12% as of Friday's close since the 13th. So really, 2.5 weeks, you had 12% gains in the triple Qs. Guys, there's some years where we don't have 12% gains. This is a pretty powerful move there. And the Nasdaq's up, 16, 17% for the year. So we're getting a little stretched again. We're going into this gap. If this consolidates, it can go through that. But right now, if we were to get up into that, maybe sometime this week, I would say there's just not enough gas to get through it. So that would probably be a selling opportunity here. I think the markets are just really stretched. They're up on light volume. Again, going back to the spiders here, it's spring break week, so that is normal. But take a look at the size of these gaps here on this chart. Not the healthiest of moves. A lot of the work being done overnight. A lot of this, we're at 50 million shares here at 3:30, so that's very light volume. We had heavier volume on Friday, but that was end of quarter. So, and again, another thing, I talked about this in my short video this morning. If XLE was flat today, this market would be down substantially. So if XLE up 5% on the day, now pushing higher, I think this is a little stretched here short term as well, but big move. But take a look at XLE, then look at the semis, down just off the lows here. It was down 1% at one point. Cloud software down almost 1%. NVIDIA, that's made it back to the flat line here. But some of these other sectors are just, look at the Russell 2000. That is now trying to get back to the flat line here, but that was, pretty well in the red earlier. We had a pretty good sell there on the IWM. Take a look at the KRE. That's obviously been a focal point here. That's down 1% on the day. XLF is green, but it is, off the highs. So we're not seeing a huge, broad move in the markets that's really conducive to us being, I would say in a healthy state. Like I said, if the XLE was just flat today, not even red, if it was just flat, this market would be much, much lower and we'd probably be in pullback mode. So just be aware of that. I think short term we're really stretched. But until we get some type of a sell signal, give the market the upside bias. I think this market probably wants to hold up into FOMC, which is next month. But that doesn't mean we're just going to go up into a straight line. Again, we are very stretched already, so just be careful here in this market. This is not an easy market to trade right now. And anybody who says that, they're probably on borrowed time themselves. So anyways, let's get over here to the Qs. Again, we talked about that gap fill. That is going to be resistance. There's also a gap above that at 329.28, going back to the 18th. But again, if we're up into this tomorrow or Wednesday, I'd have to think that it's odds favor a pullback here. It's too overdone. If you come up here and you consolidate, then it's different. But right now, market's very, very stretched here. Russell 2000, we mentioned. We talked about this gap window and the gap fill, as well as the 200 moving average being kind of your max move in the near term. And again, that does coincide kind of with that gap on the Qs, as well as this trend line there on the spider. So we'll be watching that in the coming days here. The Dow performing the best. Remember, Exxon, Chevron, that is dragging the Dow up. So that is why the Dow is outperforming, up 1%. And also not a great sign here. For one day, it's not a big deal, but you don't want to see the Dow leading. You want to see the NASDAQ and the Russell leading. Again, it's just one day and it's very news driven. So we'll give it a pass here. But that is into some resistance here with this pivot at 336. All right, over here to the semis, which we talked about already. Got that big rising wedge pattern. We're watching that. If we pull back, again, there's gaps down here, 250 area, and then all the way down to this trend line would be pretty good support there for the SMH in the near term. IGV over to cloud. Again, down 0.75%. Still an inside day. This is still okay for right now. You did have a big surge on Friday, so this does need to pull back here. And again, that level there around 310, 309.94 to be exact on that gap fill. Again, that's going to coincide with that same level on the Q. So a lot of these things kind of lining up together, which is totally normal here. But those are the levels I'm watching right now. Transports are decently lower, and this is a little bit of a sign here. Not an engulfing reversal, but we are off the lows, but down 1.25. That's not a great look. And obviously, higher crude prices putting pressure on transports makes sense. Not the greatest look. So there's the intraday. I want to go to the weekly. So we did get it back above this green bar low. Remember, this is still a failed pattern, so just be careful. This can get faded. But you get back below this area and you take out Friday's lows, transports are in trouble. And they could be telling us something here, but those higher crude prices, definitely don't ignore that. The market looks like it's fine right now, but a lot of that's because XLE is green. If XLE wasn't green, this market would be a lot lower. So just be careful in this environment. Anyways, we already mentioned bonds a little bit. They're still holding up. These aren't terrible patterns here on the daily. Again, I just don't see a lot of upside here on the weekly. Again, lots of resistance there on the 2-year and the 10-year up in this area. A lot of resistance as well as the 30-year. That still couldn't get above the 50-week moving average there on a closing basis. So again, I don't see a ton of upside here in bonds. If they consolidate enough, they can move higher. But if we look at the yields, I told you guys this last week, I don't see much below 3.2 on the 30-year, and on the 10-year, I don't see much below 3. So we can move lower here. You can't rule that out, but there's a lot of support here. And these bigger time frame patterns, that's a bull flag, So Respect yields right now, but they are pulling back. So again, we'll respect that in the short term. Anyways, over to housing, XHB, flattish to negative here. Wouldn't make too much out of it. ITB is slightly green. They're holding up okay for now. VNQ, nice reversal here, down 1% on the day. This has still been a dog. It had a nice bounce off the lows, but most of the market is flat right now, and this is down 1%, kind of like the transports. Much lower, definitely a leader to the downside. If you lose Friday's lows, it's probably back down to $80, at least in the near term. But VNQ still a weak name. XLF is green, trying to get a close above that daily 20 MA for the first time since, so we got to go all the way back to February 15th. So it looks like it's going to be able to do that there. But still, I don't see anything worth playing right now in the financial space. I don't see a ton of downside or a ton of upside right now. I definitely wouldn't short down here. I mean, they're just too already overdone. You need some consolidation. You need backing and filling, something of that nature. But financials are really kind of dead at the moment. Anyways, over to energy. We already touched on crude a little bit. Again, I don't see a lot of upside in the short term. You're into a lot of resistance up here, and it probably wants to fill that gap. It's generally what the futures market does here. The thing is, everybody's watching that gap, so it might want to chop around for a little bit before doing so. I'm not sure. I'm not so sure that $50 to $60 thesis plays out at this point. It's just too big of an outside move. If you'd stayed below, I'll say if you close the week below 81, it's possible. But I mean, that's a pretty good. I would call this generally a failed breakdown, unless this comes in very sharply towards the end of the week. That looks like a failed breakdown to me. And even though the 200-week moving average was minor, we consolidated above it. It's still a minor level, can still hold. So that may have just happened here. But obviously, crude with a big day, up 6%. XLE up 5.5. Now just off the highs, down 4.5. Excuse me, up 4.5 now. Again, going into this pivot and 100 moving average, this is also overbought. But it had a nice move, and we'll respect it. XOP, guess where it stalled out? Right into that trend line there. 200, 100 moving average above that, so that should probably back off a little bit. Oil services, nice bid, huge gap up there, and into the 300 handle. So I said if it gets through 280 and these pivots, you get to 300. Also a necktie between the 50 and 100 up there, so that will be resistance as well. Natural gas down another 4% here on the day. It is coming off the lows. Seasonally, this should get going into the month of April, but we do have a good chance for a W bottom, so we'll see if that can get going. It is behaving a little bit better today, although it gapped down in the overnight. Honestly, I'd rather see a gap down for nat gas right now than a gap up, because it creates incentive for buyers to come in, as opposed to those gap ups that gives you those rollovers. In a bear, I want to see a gap down to put a bottom in, as opposed to a gap up. So anyways, nat gas, it's holding up that $2 level for now. We'll see if it can get going in April. Dollar index, another doji here. This is incredibly unusual, but you do have kind of a bear pattern here on the daily. I still think this has to go down to double bottom. Everybody hates the dollar right now. Just be aware of that. It's like every single day there's a new headline about the dollar is done, the dollar's demise. I don't think we're there yet, and these things take a while. Doesn't mean it can't go lower here, but I think the dollar shorts are going to get pounded probably in the second half of this year, maybe even sooner than that. But right now, dollar showing some weakness, and we'll respect that. Gold here, obviously, conversely, showing strength. We closed above that major quarterly level last week, so all-time quarterly closing high, and I don't see any problems right now. It's overbought still, but you do have a daily bullish inside bar until proven otherwise, and it's even there on the weekly too. If this consolidates, this can go higher. I just think it's overdone, and I don't see a ton of upside here in the near term, unless you get more fear out of the banks. But honestly, right now, it looks like things have kind of calmed down quite a bit. Even if we look at the VIX, by the way, the VIX is showing a lot of complacency here. That's the other thing about the spiders that I'm a little nervous about here. This is the area where the VIX likes to pop in, and it's, you gapped up and sold off today. It's getting a little one-sided here, maybe just due to the spring break kind of seasonality, but definitely a little bit has my antennas up just a little bit. But gold holding up. Silver here, this is also very overbought. If this gets up into this area in the near term, I think it's a sell. You're talking about, again, another 20% since the 10th. So in the last 3 weeks or so, big move. In silver, we'll respect it right now, again, into this trend line. And, commodities tend to overshoot, but these pivots here, there's a lot of resistance up there on spot silver. Platinum hanging in there. Okay, if this consolidates a little bit more, this is a buy to 1040. So I do like this here in this area. So I talked about this. If it can firm up, we've had this inside bar since the 13th, and it started kind of getting towards that lower range. And I said, if it can firm up and get closer to 1,000 and consolidate, it can get to 1040. So we'll watch that. This is not a terrible pattern here, and I like how it's holding up much better. If we look at the weekly, again, still just bullish consolidation there. Right, it's getting back above that 100 moving average, and it's holding up. So I don't hate that pattern there at all. Copper, a little bit on the weaker side today. It still has a bullish pattern here on the daily, so we can give that the upside bias to 420. But I'm not so sure it has much past that. All right, lastly, over to Bitcoin. Let's talk about Doge first, because we have to. Because as you can see, Elon Musk changed the Twitter logo to Dogecoin's logo, and it's up 30% now. So here you go. So Dogecoin getting a nice bid, and actually made a higher high there, going into some resistance here at about 10.5, 11 cents. But big bid there on volume, so we'll see what that does tomorrow. Bitcoin holding up okay. Nothing's changed here. This should still get to 30,000 and probably a pierce of that. But again, I don't like the resistance level that is going into back here above that 30K handle. All right, anyways, let's get back over to the spiders here. We got about 15, 20 minutes left in the day. Markets are holding up okay. Again, just kind of a pin sideways. Big takeaway here, markets are going to hold up as long as volume remains light. And we keep getting data about contractions. So we was able to shrug off the OPEC news based off the ISM number. But again, market's getting really complacent and we're getting really stretched. Again, Q's up 12% in 3 weeks. Definitely a sign that you probably want to take some profits. Anyways, guys, going to wrap up here. You guys take care. Come find me on carnivoretrades.com. Talk to you guys all tomorrow.